What's going on, guys? Good morning. Welcome to our morning note. It is Tuesday, September 1. Happy new month. Getting some movement here in the market. Let's talk about it. Dow futures are down 103. Nasdaq futures off the highs, down 62. S&P futures are now red. We're green for most of the session as we're getting closer to the US cash session. E-mini Russell 2000, E-mini Russell 2000 futures down 0.42% as small caps are getting hit today. Crude oil futures up 0.87%. And let's see, Bitcoin futures up 195 at 1.65%. Gold futures up 0.90%. Silver futures up 1.5%. Euro dollar up 54 pips, 1992. For my forex people, dollar yen basically flat, down 7 pips, 105.82. And dollar is down again 0.33% at 91.83. And also the VIX is at the 26 handle at down 1.21%. All right, some headlines that came in today. Um, we had Tesla do a share offering for another $5 billion to raise some cash. No real details on why they're doing it, but it's an ATM. ATM means at the money, whatever it's available to sell. And for new investors, or what have you. As you notice, Tesla is becoming definitely more shareholder focused. So with that news, Tesla actually came back down. We were as high as 538.75. Now it is down about $2 a share pre-market, which is not that much. It was up higher, about as much as 8% pre-market. Now, my take in regards to Tesla doing the offering, I mean, you have one or two things here, guys. It's something we have called confirmation bias. It's just human nature. So if you're a Tesla bull, this is your pitch. You're basically saying this is a good thing for Tesla to strike while the iron's hot, offering more shares in order to raise more cash for future projects since they are a growth company and they don't want to take on debt. So that's the positive. The negative, if you're a bear saying, oh, why would they offer more shares? They're trying to dilute current shareholders. They're just trying to sell at the top. You can have that too. Tesla's its own animal. Tesla's really its own animal. It's a stock that's none like any other, where you have the CEO saying 420 funding secured, investigated by the SEC for that, no big deal. Then my stock price is too high in my opinion, and it still soars. He makes fun of the short sellers. I mean, it's a company that defies logic if you read in your textbooks. But if you look at the price action and where it's coming from, I'm going to lean the bull case here. I am long Tesla, obviously, as a disclaimer. I think this is actually a fine thing to me, where they're offering more shares. Sure, it dilutes current shareholders, but it also is supply and demand. So, would I buy more shares here? At this very juncture, no. I think I would probably buy around 470, 450. Right here, I actually think we would kind of get a bounce on Tesla. I think the headline popped up in front of everyone's Bloomberg or Reuters feed and thought, oh, diluting shareholders. Many companies have done this. The last one that I remember did it was Hertz, and they definitely got roped in by the SEC because the volatility was so bad, and they were just trying to dump more stock to unsuspecting investors. Now, Hertz is a whole different animal than Tesla. Obviously, Tesla's actually profitable. Tesla's actually growing. They have prospects of growth. And Wedbush, for example, they just actually increased their price target to 700. If you trust those investment banks' prices and their price targets. Again, I'm still long the stock. You can have any narrative you want. If you don't like the stock and you hate it, and you hate Musk and you hate Tesla, you're gonna say this is horrific for the stock and it's gonna die and it's gonna go to one, it's going to zero. And if you're a bull, you're gonna say, well, I'm gonna buy more shares here. I don't care. I believe in the company and I think it's gonna go up. It really is at the end of the day, guys. It's not something that you could learn this in economics class in college. It really is based on investing on what you like and what you know. So if you do like Tesla, you like the story and their prospects for future growth, you're more likely going to stay long. If you're up 300% on the stock for the year, you're probably going to take some cash here or profits on the side like we talked about a week ago. And that's completely fine. And if you hate Elon Musk, you think it's all a Ponzi scheme, you think it's a scam, then you're going to keep talking crap about it. More than likely, you're probably not going to short the stock. You'll probably ride puts if you want, but not short it, since right now short interest is actually at its lowest point. So it really depends on you. It's kind of like just if you're Republican, if you're a Democrat, you're going to listen to what you agree with. So if you're a Tesla bear and you hate Tesla, you're more likely going to search on Twitter and message boards and anyone to confirm your bias. And if you're bullish on Tesla, you're more likely looking for confirmation there. But if you're looking for my opinion, it doesn't change anything to me. I'll probably add more shares right around 470 or 475 if we get there. And I'm still bullish the stock long term. Now, keep in mind, I'm up on the stock about 280% since I bought it. Remember, it was one of our top 10 stocks of 2020. That doesn't change anything. I don't buy stocks to sell it within the year. I definitely don't buy stocks to sell it within 5 years. I'm looking for longer term prospects. I want to own these names for the long haul. So that's just my 2 cents there. In regards to the NASDAQ was pushing today. I did trade futures with our futures group, and we also got a very nice return on it. I made about $970 on it. I don't have the exact details on how many points because I don't have the chat room in front of me, but I got out at 1228. So we are now at 12,180 on it, but it is sliding back slightly. When you do futures, you got to understand that usually ahead of the cash session at 9:30, we get a little bit of a pullback. It's completely normal. It's just been the way it is. It's almost been buy at the close of the market and then sell before the open. That's what it's been for the last, I want to say 18 months. QQQ, I got some calls there running. It is green pre-market, which is nice. Apple, I closed yesterday. I had those, I believe, the 130 calls, but I got out of those. Apple is announcing that they are going to be ordering a lot about, I don't know how many iPhones. I think 50 million 5G iPhones or 30 million or so. So they're ready for that release this month. As someone who's a big Apple fan, of course, I'm going to go ahead and upgrade my iPhone to the 5G, the new super cycle. And it makes me very bullish in the stock. Now we just have to post split. What's my target? I mean, 175 to me isn't out of proportion by the end of the year. I think Apple is treated like a tech company, even though they're a consumer goods company. And that's just my 2 cents on it. I'm still bullish on Apple. Nothing has changed that narrative either. Looking at E-mini futures, looks like we're testing the 100-day moving average now, 34.94. Let's see what we get on that bounce. The previous 100-day moving average yesterday was 34.79 as we moved up. All right, I know we got a lot of questions, so that was my 2 cents. Let's go ahead and answer them. Good morning, good morning, good morning. Ayush is asking about work and Zoom. Okay, so when it comes to work, it's Slack. Slack is pushing up pre-market, just like most tech, with Zoom having a stellar quarter, stellar blowout quarter. I don't trade work for the most part, and options are not that great on it. I try to go with a handful of names. It's been working out for us. Zoom is absolutely on a tear from 325 to 445. I did not play it. I tend to not play earnings, but again, Zoom is absolutely a monster. I'd just be nervous on profit taking in the morning, but let's see what happens. Apple, NIO, already talked about Apple. NIO, unless we get a break of 2097, I'm not trading that thing. Thoughts on the Nasdaq 100? Yeah, I'm still long it. I still have the QQQ long. Thoughts on Walmart? They released Walmart Plus. For me, that break of 144.69 would be a very intriguing prospect with that break. There goes Tesla Lotto. No, that's what do you mean there goes it? If it's down, it's not even open yet. The market's not open yet. I think what I find very interesting about our members, probably new ones, is that the slightest chance of any kind of uncomfort, it's everything is over. The world's over. It's almost like, oh, I need an oil change in my car, sell the car. And I find that very interesting and very funny because it just tells me you're way over positioned. And I could tell who's over positioned like the back of my hand. It's just so easy to see. I hope you're not over positioned there. Let's see. DocuSign, Nvidia, Walmart. How do you feel about BABA? I think they're all fine. I own Nvidia. I don't have Walmart. I love BABA. DocuSign is fine. I don't trade it though. Square thoughts long term. Love it long term. They got a price upgrade, but I am not trading it here. What are the TikTok deal being announced today? I have no idea. Who knows with that? I already talked about Apple earlier that I have a price target of 175 on it. eBay doesn't look remotely interesting to me to buy at all. Let's see. From your voice, it seems like you're depressed. Hopefully you're okay. I'm actually fine. I've just been up since 3:30 this morning, and I've already had 1 cup of coffee. But depressed? No, what's there to be depressed about? I love doing this stuff every day. But thank you for your concern. Let's see. Morning, based on past performance, do you think Tesla could reach 700 this week? 700 this week? No. CrowdStrike before earnings. I would not play earnings on CrowdStrike unless you really just want to roll the dice. What you said about Tesla, do you think it's wise to close out Tesla calls for reposition better? No, not at all. Square filled up yesterday and broke out this AM chart yesterday. Should run. Could be interesting. LHX long term, I like it. Penn long term, I like too. Thoughts on Donkey? I already answered that. Pre-market is bait. Great analogy. You're welcome. SLV based on Fed news? What Fed news? We've already had Fed news. You ever think about taxes when you trade invest? That's why I have a great accountant who's my CFO. He handles all that stuff. All I do is sign the check, man. That's all I do. I don't worry about that stuff. I just get the paperwork and I just sign it. And now we are down $10 on Tesla pre-market. And thoughts, AMD. AMD yesterday did rally. It is out up about almost $1 pre-market. I own it long term, so I'm happy with it. Thoughts on SPY. I do own some SPY calls, and I'm still rolling with that thing. And again, I'm still bullish on SPY, ES, and Qs. mRNA long term, no. I would not pick a vaccine or a biotech company. I would just invest in the IBB, like I've been saying now for months. Just own IBB, which has a basket of those names instead of just picking one. You don't know what mRNA is going to do. You don't know who's going to get the vaccine first. Unless you have some inside info that I don't know about, it ain't going to happen. JD, out of all the Chinese companies, I'd rather own BABA than JD. Peloton, Peloton, I don't want to own. It's more of the indoor workout thing. It's performed very well. If you think we're gonna still have COVID for the next 12 months, then buy Peloton, unless people are gonna get out and go to the gym. Too late to hop on Tesla Lotto Play? No. Morning, Carlos. Missed thoughts on SQ. I like it long term, but there's nothing here to play unless you break those highs. Do you think with the economy's reopening, sector rotation will happen? Tech sinks? No, because tech is still part of our world at the end of the day. I don't think tech will ever get rotated out. The only issue that people may sell it for is for profit taking and valuation purposes. But these are companies that are still growing. Have you thought about owning Tencent? No, I haven't. This gaming for you if you're scared pre-market. That car analogy was gold. Yeah, it's true. If you didn't get the car analogy, it's like if people freak out over little things, if you need an oil change or you have a flat tire in your car, they want to sell the car immediately. I just I don't understand how that works. It just shows me that you are overpositioned, and the more you do this, guys, at the end of the day, the less you're gonna have emotion. It's like, for example, when you're 16 years old and you drove the car for the first time, were you excited? Probably. When you parked correctly for the first time, or you got on the highway for the first time, were you excited? Probably. Now you're probably in your 20s, your 30s, and you drive a car. You're not exactly going home and cheering yourself. It's just another day. So you'll know you're a great trader that when you lose a trade or win a trade, you have the same emotion. It just becomes natural to you. It doesn't even change anything. Let's see. Thoughts on Diz. I love Diz long term and I own it. But I have not added to it lately. It's still at the 100-day moving average. Very sideways action. Nothing to play there. Look at Tesla crawling back. Yep, absolutely. Absolutely. Tesla is one of those names that it moves. And if you don't like roller coaster rides, Tesla ain't for you, man. It's just one of those names that you've got to get used to the volatility in that name. A lot of people hate it, a lot of people love it. It's like World War II right there. And for some reason, people love to hate it and people hate to love it, I guess. It's just one of those things. And I'm just the type of guy, I just own it. I don't have any kind of feelings for stocks. Obviously, there's some names that I like more than others. There's some names that I never want to sell. But this fact of like, you know, oh, I can't sell it because I love the stock. I mean, it's just a stock, at the end of the day. I think it's kind of funny. And I do always say I do love Apple. Yes, it's true. I do always say I love Apple. But, there's gonna be some time in the future that you're gonna sell and take some profits. What signs do you look for breakouts? At the end of the day, you want to see different levels. You want to see the previous high. You want to see the 100-day, the 200-day moving average. Macy's with all the retailers reporting strong. I'd rather not roll the dice on that name. Actually, I don't even think Macy's is going to survive long term, in my opinion. So I'd rather just stay away. Do you see a roof for Nasdaq 100? I don't. I don't. I think we still have a lot more to go, guys. I think that this stock market is more like 2009 than it is like 1999. That means if you were watching the markets in 2009, you saw we were crawling out of the Great Recession, and we got as high as February 2020. That's when it ended. 11 years of growth. I'm expecting about 7 to 9 years of economic growth, 7 to 9 years of recovery, and a lot higher stock market. That's why I said my profit target in S&P is 4,000 within 12 months, and I'm sticking to that. I know everyone hates me. Stay bullish, stay crap, whatever. You know, some guy said, "Oh, it's talking crap about that's not how things work, and that's not how it works." Listen, man, you don't have to follow us. I don't follow you. You follow us. So, I mean, at the end of the day, I'm not here to take his advice, nor do I care. So, I get it. You're used to the textbook of economics. Throw that out the window, guys. It really throw it out the window. Do you have a video of your Think and Swim setup? No, I don't. Actually, I do on our Udemy course. My apologies. UAVS went up 22% on the news of Amazon go ahead for government drone delivery. Do you believe that business like this will take off? Sure. I mean, it could. But that just on Amazon. What's your level on Amazon? Amazon hit all-time highs. It really goes as high as the imagination could take you. 34.84 now, 34.95 is where we're at currently as the highest. Patience, right. Thanks enough. Can't wait to make enough join your group. Can't fight the Fed. Yeah, let me go ahead and make a quick point on something that a lot of people, when I say stay bullish, I mean it. And I really do mean that. And I remember this very vividly in March when I said, when we hit 2,300 and we bounce back, guys, you're betting on America. You really are. And if you think the world's going to end or we're going to fight each other in the street with knives for food, okay, then short the world. Go for it. I remember I saw some guy yesterday on Twitter, and he said, "Oh, the bears were right, even though the market's up." I mean, okay, what's more important to you, being right or getting paid? I mean, I don't care about being right. I'd rather just get paid and everyone else get money too. That's the idea. See, I really don't take advice or anyone or care about anybody that's on Twitter or anyone on social media that does not have skin in the game. If this person is giving you advice and does not have a position or cash in the game, don't listen to them at all. Like it's pointless. It's meaningless. It's kind of like, and I'm going to say the sports analogy, someone like a Skip Bayless or a Stephen A. Smith who've never played a professional game, basketball game in their life, giving their analysis on how to play NBA game, play the NBA, and criticizing NBA players. Like you've never played the NBA before, you have no idea what you're talking about. That's how I feel when it comes to analysis out there. If they don't have money in the market, if they hate Tesla, fine. I always say, okay, then short it. But they usually don't. It's just this. I put my money in my mouth, is guys. If I'm long a stock, I let you know. I say, listen, man, my money's in it. I'm long it. If you guys want to get in, that's up to you. But I stick to at least with my analysis and I roll with it. I've been saying this for a while now. Now, there's a couple things I want to go over real quick before I end the call or this video. Is the cycle of the Fed and the cycle of money. That's just the reality of it. When the market now in 1999, 2001, that 2 year period, 3 year period, the Fed was actually raising interest rates with Alan Greenspan because what we had was irrational exuberance. Fine. I remember that time CDs, certificates of deposit, were going from 5% to 6%. All right. So imagine if you had cash, you could put it in an FDIC insured account, meaning no risk of loss, and make 6%. Why? Because inflation was higher and they were trying to cool the market, cool the economy because it was running too hot. Fine. That's what you do when you raise rates. You want to curb inflation because of economic growth getting too hot. Economics is what we call the boring science. It really is. So again, it's like the porridge and the three little bears. Too hot or too cold. So right now with the Fed's mandate is they will do whatever it takes to prop the economy. Our unemployment right now is right around 11%. You want to raise rates now? Why would you raise rates now? The economy's not hot. The stock market is. I'll give you that. Fine. But everyone else, you and I are having a conversation here. We trade stocks, right? Or options or investors. Not everyone else does. Really, it's really just the top 15% of the United States that's invested in the stock market. The rest of the people don't. So, people need to get out of this bubble of like, oh, stock market's up, we should raise rates. Inflation's pretty tame. If you look at it, rent is down, gas is down, technology is down, everything is down in prices except two things: healthcare and food. Oh, and also college tuition, which should go down. But basically, food is prices are up. Why? Because of logistical issues. Because a lot of plants are closed due to COVID. Poultry, meat, packing. For a while, it happened, and the rest. The other thing that's going up is healthcare because the healthcare system is constrained. So really, inflation is very tame. You can see this every month when they report the CPI, Consumer Price Index. But fuel gas prices are down the past 4 years. So I don't know where people are saying inflation's coming when I don't see it. So again, the Fed is lowering rates. The Fed is mandating to you to take risk and risk your assets. Try putting your money in a savings account today. I looked at my Ally savings account. It pays me 0.5% of savings. It's nothing. What's the point? Why would I hoard cash? Now, it's good to have an emergency fund, sure, but to hoard cash, it's not doing anything. I mean, the Fed is telling you, forget bonds, forget safety, go put your money out to work in the economy to boost production. Now, that's a whole different conversation if you don't think the stock market boosts production, but it's just a reality. And that's what the Fed is doing. They're going to keep rates low for the minimum of 5 years. What does that tell you? If money is cheap and you could borrow it and banks could still reinvest into businesses, lend it out, you think the economy is going to stay stagnant? Probably not. So here's the deal. When rates are lower, that's kind of your green light to buy stocks because you want yield. When rates are higher, it's time to pull back yield, pull back your riskier investments, what we call cyclicals, and go into more value, which is your dividends, your bonds, CDs, kind of hoard cash because you want safety while still getting return. If you ask me today, what would I rather have? Of course, I'd rather have the CD at 5% because it's safe and I know I'm going to get that income. But rates are higher. When rates are lower, I'm going for growth. I'm looking for return. Hence the Teslas, the Amazons, the DocuSigns, the Zooms of the world, or Apples and Facebooks of the world, for example. That's why tech is growing so quickly. That's why banks are doing so poorly. That's why dividend paying companies are paying so poorly because no one is going to those names. It's what we call a cyclical move due to rates. I hope that makes sense. Great. Remember we said that in March. First take, MasterCard, Williams Sonoma. I like Williams Sonoma and I like MasterCard. Both of them good long term. Yes. If Tesla goes to 200, it won't matter. The world's ending. Not really, but yeah, that ain't happening though. That's why the Dems want to tax more to get Medicare for all. That's a whole different conversation. I'm not going to get into politics here. We're all friends here. And right now, the Democrats and Republicans might well be Bloods and Crips, how everyone hates each other. Very in place with this little rant here on Carlos. Thank you. Okay, so I just went over that. If you want to go over this again, feel free to check it out. Again, sorry I went a little over, but it's really smart. It's really important to understand the cyclical movement of the economy and how the Fed plays out. Money is cheaper. I'm not here to fuel a mania. I'm here for you to get yours. I don't care about everyone else and what they're doing. I don't care about Goldman Sachs or Morgan Stanley. I care about you, the viewer, so you could be ahead of the game. The issue with a lot of people, guys, is that traders like you are outperforming the idiot banks and the idiot hedge funds. You're doing your homework. That's what they don't like. The old Wall Street is very upset that you have access to the same information they have, that you used to pay them ridiculous amount of fees for underperformance. Now you could do it yourself. This is why they don't like Robinhood. This is why they don't like day traders. This is why they crap on you and they talk crap about you. But you know what? Now those hedge funds that missed the rally that you did not miss because you've been paying attention, they want the market to go lower so they can get in. How are you going to explain to an investor, oh, the S&P's up, Nasdaq's up, 50% this year, but our fund is up 2% because we kept it in gold and we kept it in cash and we kept it in bonds. You'd be fired and they withdraw their money in a heartbeat because you missed the best stock buying opportunity in a decade. That's the problem with all Wall Street. That's the problem with old talking heads on CNBC and Bloomberg and Fox Business that put you down, the individual trader that says you're not smart enough, you're not good enough, listen to us. You don't need to. You have all the information in front of you on the internet. You have people like us. You have other individuals on Instagram that you could follow. Again, do your homework and you'll be fine, guys, at the end of the day. Don't depend on anybody. Do it yourself. You could do this. All right, guys, we'll leave it there. Have a great rest of your day. Thank you so much for joining me for our morning note / morning rant / first take. Have a great rest of your day. We'll catch you tomorrow 9 a.m. My name is Carlos Garcia, CEO of G.A.R Capital. Make sure to click bottom right-hand corner to like and subscribe and to turn on notifications for new videos. We'll catch you guys later.